Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. Today it is my pleasure to talk with you about gold because gold is the best performing asset right now. It's climbing higher. We had a bullish breakout yesterday of a very important resistance on $1,245 per ounce, and we are still advancing higher now. It's $1,257 per ounce. It is looking very bullish. We're about to go to $1,280 per ounce, and chances for this kind of movement are really high, even despite the fact that we're on a local highs. We're on the highest levels since the 11th of November. Why we have such movement? That's a very interesting question because we do have a local highs on stocks. Maybe not today because stocks are declining today a little bit, but generally this week was very good for stocks. So why we do have an upswing on gold? Well, many people explain this movement with the fact that Treasury Secretary Mr. Mnuchin said that we should have low interest rates for a longer time, and which failed to lift American dollar, and also due to the fact, yes, they are explaining that this is caused by weaker dollar. But in my opinion, look at the whole trading in 2017, where dollar was in some days, some weeks, significantly stronger. But even in that time, gold was climbing higher. In every book, they say that when the stocks are climbing higher and American dollar is stronger, gold should be weaker. But it's not happening right now. In my opinion, we do have a bubble on stocks, and it looks like the end of the bubble. So what happens at the end of the bubble is that smart money are closing their positions, are escaping from the market, and only those traders, those investors, which are usually late, which are always late, are buying. Smart money are moving their assets, their capital, their money into safe haven assets, like for example gold, which should be trading even better once there will be a deeper correction on stocks. And that's my scenario, that in 2017 we will see a deeper correction on stocks, maybe 2017, 2018, but sometime in those 2 years. And smart money are protecting themselves as early as they can, and they are buying gold. But let me show you the chart of gold. Also, you can see this breakout here, but once I'll be showing you this chart, maybe let me continue with the fundamentals, because we had a bit of fundamentals as well. We had a few words from Mr. Kaplan from Fed. It was said that hikes should come sooner rather than later. I mean, rate hikes, obviously. We had a bit of maybe not intervention, but a few words from Donald Trump as well. He said that China is a great champion at currency manipulation. A bit harsh words. What is more? We had the information from OPEC that OPEC and non-OPEC producers implemented 86% of output cuts, which, well, in my opinion, fair enough. That's quite a high value, but it fails to lift the price of the oil higher, which I will show you later. Also, what is worth noticing that we had a series of 10 consecutive Dow Jones Industrials record highs. We haven't seen that since 1987, but this great series may be coming to an end, may be about to end because, well, today European shares are much lower, European stocks are much lower. American stocks will probably start with a decline, and we'll see if we will make another record or not. So, as I said, the subswing on gold is mostly fueled by, it's mostly driven by Treasury Secretary Mr. Steven Mnuchin, who said on Thursday that he expects low borrowing costs to so low interest rates to persist, which caused a drop on dollar. This drop on dollar was seen maybe not on euro dollar because euro is also very weak, but on other instruments like, for example, cable, like British pound to American dollar. What we also had, I'm trying to scan the macro news. I think that that would be actually it from the fundamental point of view. Also, give me a second. I will show you the economic calendar for today. Okay, just a few seconds. As on Friday, you can see that we don't have nothing significant apart from the data from Canada, which I was telling you yesterday, CPI from Canada. So if you're having a position on a Canadian dollar, watch for this data. And as always, let me show you important data next week because, well, it's Friday. So we all want to know what's gonna happen next week before starting trading. So on Monday you can see durable goods orders from United States will be the most important data. Tuesday will be relatively boring in terms of data. On Wednesday, what do we have is a rate statement from Bank of Canada, rate decision, and PMIs from United States, and PMIs from Germany, PMIs from China. On Thursday, retail sales from Switzerland, but well, it's data only important for Swiss franc. So I think that CPI from Eurozone will be more important than this one. And on Friday, second part of the PMIs from Eurozone and from United States. So also not very interesting week in terms of the macro data, but hopefully we'll get some more volatility from the political side of the market, right? Because we all know that markets are driven by politics, by Donald Trump especially, but also in the last few weeks by the situation in France, where we are getting closer and closer to the elections, and many experts are blaming decline, for example, in euro on French elections. But obviously, we will have to see. But we don't have anything like a big game changers next week. So we can go to the charts right now, and let me show you the gold. About gold, I told you more or less what's going on here, but let's look a bit closer. Beautiful breakout, then a correction, then a upswing again. That's really nice to see this kind of movement. We can draw a resistance here. I wouldn't be surprised if we would see something like that. Okay, let me change the color here. That would be really something technical here. Very nice to see that. Here probably a bounce or breakout. It doesn't really matter right now because we are still $23 from this resistance, so we'll see what's gonna happen. But technically, that would be great to see this kind of movement. On silver is also advancing higher. As you can see, they broke from this side trend here. We can call it a pennant or a symmetric triangle. It doesn't really matter. What matters is a breakout, also using the latest resistance as a support. As you can see, breakout, test, and then an upswing. Very technical. It wasn't a coincidence. It's not a false breakout. It's a legitimate breakout because we do have an upswing, then a test was positive, and then upswing again. So it looks very, very nice. Sentiment here stays bullish. Well, if you follow us, if you trade with us, if you're watching daily analytical report or trading sniper, or you follow us on other channels, you know that we are positive on gold and silver, so that's not a surprise from your side. Well, that's not a surprise that we're happy with the outcome of the trading right now, because we are bullish here for a long time. Australian dollar to Canadian dollar. I'm showing instruments which I was mentioning on Trading Sniper, and yesterday, 2 days ago, that was a decent buying opportunity here. Why? Because, well, we had a kind of inverse head and shoulder formation, left shoulder, head and right shoulder. Then we had a breakout of this neckline and a horizontal resistance on 1.01. And on hourly chart, you will be able to see that after the breakout, we had a retest of this level, but this time it was tested as a support. Test was positive. Then another one, and test was positive, but price formed head and shoulder formation, and finally they broke this level. Let me, maybe if I put it with a blue color, that will be better. Left shoulder, head, and the right shoulder, a breakout of a neckline, and there was a buying opportunity. It was a false buying opportunity, so if somebody used that, probably ended with a stop loss. Luckily, we didn't have this position, but anyway, now it looks like a decent sell opportunity. Why is that? Because of this head and shoulder formation being also in the same time a false breakout here. Alright, this is a false breakout. The price also is breaking the trend line. As you can see, trend line, that's a legitimate trend line. It does not have 2 points where the price touches the trend line, but it has 1, 2, 3, 4, 5, 6, 7. Okay, so that's a legitimate trend line. If you believe that this downswing will be continued, let me highlight Fibos. Hopefully we will be able to change the colors of the Fibo. Yes. Okay. And we can try to estimate how deep will be this correction. As always, my favorite, 38.2%. So this creates an trading occasion for at least 120 pips. Stop loss around 40-50 pips, which gives 3 to 1 risk to reward ratio. So potential profit is 3 times higher than a potential loss. It's a good ratio for a trade. That's Australian dollar to Canadian dollar. Let me check the swaps. Here swaps for short positions are negative, so unfortunately going short here in long term won't be good in terms of the carry trading, but still this position can last 2-3 days. For you won't get much, you won't have to pay a lot in terms of the swap points. Next instrument is British pound to American dollar, where you actually can see the weakness of American dollar. Finally, we got a breakout from the symmetric triangle, which was present on the chart for the last few weeks. I showed you the volatility, 360 pips, then 200. It was decreasing, so it was a time for them to decide what they want to do, where they want to go. They picked the upswing, fair enough. Let it be. They broke two local resistance, this one first, then this one. The second one, so the green one, is used now as a support. So price action for the win, because broken support becomes resistance. 1.2520. Okay, and they bounced from it. They met local resistance, and now they are closed in a probably trend continuation pattern, and from this the price should advance higher. I'm not fully convinced about this upswing. Well, you know that for a long time I'm well, maybe not for a long time, but generally I'm bullish on British pound to American dollar. Especially I was telling you about this bullish engulfing pattern here, which created a double bottom formation, right? So that for me was a strong signal, so I should be happy with the outcome for today's week. But okay, fair enough. I will be happy when they will break this horizontal resistance. The candle from this week is the first step. Well, actually the first step was this bullish engulfing here. This is the second step. Actually this bullish engulfing pattern I was showing you mostly on British pound to Canadian dollar. Let me show you the situation on that instrument. Weekly chart. Yes, look at that double bottom formation, bullish engulfing, small correction, and now the price is advancing higher. Right, so more or less everything is going according to the plan, but we have to wait. Well, maybe we got this breakout now. Do we have this breakout? Can this be considered as a breakout here and a test of this line? Too early to say that for definite, right? But we do have a potential reversal here. There is a double bottom formation. Again, on a weekly chart, it's a bullish engulfing. Strong reversal pattern. Once they will be able to break this trend line, that movement should accelerate. And again, where do I see it going? Is this area from the bottoms from 2014. Then we have a legitimate resistance created by those highs from 2016. And in my opinion, price, if they will break this line, the price should get there. Okay, that was cable. Euro dollar. I wasn't convinced with euro dollar going up, but they created this reversal pattern. That's a double bottom formation with hammers. Traders are following that. But in my opinion, buy signal will be created once this upper line of the wedge will be broken. We have an attempt to do that. Once the H4 candlestick will be able to close above this level, I think this movement will accelerate. So far, I'm not so convinced about that, but once they will be able to close above this level, the movement should accelerate, and maybe we will be able to finally draw this right shoulder of the inverse head and shoulder formation, because we do have a left shoulder head and a right shoulder. I was thinking more of a upswing here, but maybe they wanted to make a deeper right shoulder, and they will advance higher from this point, 220 pips. We will see. It looks kind of optimistic for buyers right now. Euro to New Zealand dollar was doing very good after this false inverted head and shoulder formation and inverse head and shoulder formation and breakout of the line connecting bottom of the head and the bottom of the right shoulder. But now euro is a bit stronger and the price advancing higher, but as long as they stay below the black line, the sentiment here is negative. British pound to Australian dollar here. That is why you can see I didn't tell you to go short here, but I said that the better option would be to wait for a breakout here with a pending order, exactly on this blue line. Why is that? Because they defended the support. You shouldn't go short when the price is above the support, right? Because the support always can be defended, as you can see here. The support was defended. Going short above the support is not the smartest idea you can do. You should go short when the price bounces from resistance or breaks the support. But when the price is slightly above the support, going short is not the best idea. It's not the best move you can do. So this support looks like it's defended, at least for now. How does the weekly chart looks like? There is a kind of a bullish engulfing here, but on the pair with Australian dollar, I'm not convinced. Why is that? Because the Australian dollar is very strong, right? So I wouldn't go against a strong currency even if British pound looks promising. American dollar to Canadian dollar, after they bounced from this horizontal support highlighted with a green color, they are struggling to beat the local resistance. We bounced from the hammer to the shooting star, right? Hammer, shooting star. Well, not a shooting star because we do have a long tail here, but a pin bar. Definitely a pin bar. So from pin bar to pin bar, and the sentiment is neutral. Sell signal will be triggered once the price will break the green line. Buy signal will be triggered once the price will break the red line. Australian dollar to American dollar is bouncing from this important horizontal resistance and is bouncing for the second time. Okay, so it doesn't look very promising. Interesting fact is that Australian dollar was correlated with gold, is correlated with gold, but gold is advancing higher. Australian dollar is bouncing from this resistance. As you can see, we had this correction for 70 pips as always, but the bounce was not very significant, so this correction was a bit deeper. But I think we can still try to catch 70 pips corrections. This one so far 60. Maybe they will make a 70 pips correction and they will bounce. We will see. Euro to Australian dollar. Finally, maybe we'll have a nice bounce from the horizontal support here. As you can see, we had a hammer last week. We are having a hammer this week. After such a setup, I think the bounce is probable, especially that we are breaking the midterm trend line here. The next trend line is here. So 180 pips bounce. Obviously, there is a there is a divergence without even looking on it, as you can see here. That's the thing with divergences. They are almost always present. So not every one of them is relevant, right? If you like counter trading, this looks like a good idea. Canadian dollar to Japanese yen. Downswing, flag, downswing. They bounce from the horizontal resistance and they are aiming lower. But what I would wait here for, this flag is no longer needed here. Maybe it's something like that, right? Here. Inverted inverse head and shoulder formation, left shoulder, head, right shoulder, breakout of a neckline and a further upswing. But that's just my hypothesis. New Zealand dollar to American dollar, bounce from horizontal support here and is advancing higher, but no signal here. This also New Zealand dollar to Japanese yen, waiting for breakout of this neckline from the double top formation. I wouldn't open short position as soon as they break the neckline. I would wait for the horizontal support first. Euro to Norwegian krone. After the breakout of the horizontal support, they tested once and the second time as a resistance. That's a good opportunity for short-term traders to catch a small bounce. Even if they plan to break, if they are planning to break it, at least a small bounce is more than welcomed. Okay, and oil and DAX. Yep, that's the correction coming, right? Even if we lower this trend line here, it looks like a deeper correction is coming. Oh, I don't know if it's a start of of a recession. Probably not. But this downswing looks deep. It retraced already 50% of the whole upswing from which started 8th of May. There was no correction equality here, and the price is advancing lower and lower. That doesn't look good for the buyers. Looks even kind of dangerous. Is it? Can we do it like that? Yes, we can. Why not? But anyway, as long as we stay, I would say, above this support, the sentiment is positive. Also, let me draw Fibonacci's here. Yes, we can go even here. Thus, that situation does not change the long-term uptrend. It only brings the opportunity for a correction, especially that you remember what's happening on American stocks. It's happening all the time. There's a sharp downswing, but they defend it and they perform even more spectacular upswing afterwards, right? That's how traders trade on American stock exchange, and maybe that will happen one more time. On oil, they try to break from this symmetric triangle, but what they do have on their way is this horizontal resistance on $57.45 per barrel. They tried to break it one time this week, second time just yesterday, and they just cannot force this resistance. Again, price action principle. If the price does not want to go up, probably it will go down. I wouldn't go down now. There is a midterm trend line here. once the price will be able to break this trend line, that would be a good opportunity to go short. So actually, yes, we did get few interesting trading setups this week. I'm really happy with the outcome on gold, because we are bullish on gold since the beginning of the year, and gold is trading excellent, just excellent. And I hope that you also benefit from that. If you watch our videos, if you follow us, you should be happy with your trading as well. Obviously, remember that trading and investment in financial markets involves an element of risk. Always do not forget about that. And we would be pleased if you would follow us on our Twitter and our website alpari.news. Thanks very much. And now we're having a short break, and after that a webinar about MetaTrader 4. Thanks very much and goodbye.